Do have an arch enemy. Sounds like a Marvel movie.
Right.
No, it's not Thanos. I'm inevitable.
I am inevitable.
My arch enemy is Wall Street. Wall Street, to me, is the biggest problem when it comes to retirement. Wall Street brokers, financial advisors, banks, they make huge amounts of fees off both the accumulation and the decumulation side of wealth in America, and their track record is what I'm frustrated with. They've got a 50% failure rate.
Right.
And my problem with Wall Street is three things. Number one, excessive optimism, crazy optimism. Number two, ignored risks. And number three, bad assumptions. And when I talk about those three things, what I mean is when these advisors are exceedingly optimistic, they think that the markets will never go down, right? I call this the normalcy bias, where everything is been good. It's good today, therefore it always should be good. Boy, that's dangerous. Thinking markets will never go down as you get closer to retirement is a big gamble. It's dangerous if you don't have time to make up for losses. So then we've got ignored risks. And this is a big one. So what happens is most people, when they go to an advisor and they create this income plan, they use very low inflation rates when they factor in their future. And it ends up being the case that if there is indeed a higher inflation rate, they're gonna run out of money. And they're gonna have to go back to work in their 80s, which is brutal.
Yeah, who wants to do that?
Nobody.
I'm not doing that.
Who wants to go work at Walmart, in their 80s? Not because they want to, that's one thing.
Right.
But because they have to. Not factoring in that Social Security will be cut by 1/3 in 2033, that's called ignoring a big risk. And so for those people who are watching, if this is resonating with you and you're like, my advisor has never told me that Social Security is gonna get cut by 1/3, you need to give us a call. But the third thing is bad assumptions. So, a lot of advisors are going to use something called a safe withdrawal rate. We'll talk about that a little later. But a 4% safe withdrawal rate was pretty common among financial advisors, which basically means if I've got $1 million saved and I have a 4% safe withdrawal rate, 40 grand a year, I should never run out of money, right? Well, that is actually grossly too high based upon Nobel-winning economists, big financial media companies like Morningstar, analysis companies. And then the other thing that's really frustrating that I see all the time is bad illustrations, right? So they'll illustrate market returns of 7, 8, 9%, when if you look back to 2020, returns have not been that high. And you've got to factor in realistic rates of return. That way we're not, betting the farm on something that may or may not happen. Again, I hate to see when these retirement plans are created and it's built upon a faulty premise. And what ends up happening is these people run out of money before they run out of life. Excessive optimism, ignoring the risks and bad assumptions, that is called a recipe for failure in retirement. And it's no wonder there's a 50% failure rate. And I'm here to tell our watchers, there's a better way. I'm on a mission to make retirement great again. When you retire counting on Wall Street, there's almost, as of right now, according to the National Bureau of Economic Research, there is a 50% failure rate. That is unacceptable. In what job can you have a 50% failure rate and still get paid? I mean, I sure wouldn't want somebody working for me that was failing 50% of the time. Are you kidding me? So why are these people hiring advisors that lose their money, charge them a bunch of fees, and end up, creating this false illusion that they're gonna be just fine? It drives me crazy. You end up living in fear, right? Fear of losing money, fear of wasting money on high fees, fear of running out of money before you run out of life. You end up having to go back to work. It's terrible. And retirement is not the time to gamble your hard-earned savings with Wall Street. Again, we're going to talk about that a little bit more, that safe withdrawal rate, but I want to emphasize, it is kind of like a Marvel movie because it's this universal struggle. The stakes are so high. It may not be the end of the world, if we don't defeat this enemy, but it may be the end of the world for you, or the end of the retirement, future. And so that's a big deal, and we don't want that to be dark and gloomy. We want that to be happy and peace-filled and guaranteed.